Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. And I want to do a quick video today. Well, not quick, but just a video today. And just a little bit about gold and my thoughts. And if you look at it, I hear a lot of commentators or people who do analyst and movement, they talk about the bull market that began in 2015 and why I think for most people it doesn't feel like one. And this is one reason I don't feel like. If you look at it here in January, this is the bottom they talked about, which was roughly 1,039. And it really didn't make a in September or July 2016. So like the bottom was September 2015, but September 16 is when this top occurred. It was out 1356. And then if you actually look at it, it didn't get back there and break out till May of 2019. That's a long time to hold. And not only that, it's not like it went sideways. If you look at it, in July of 2018, it was at 1174. So not as it sideways, it was just going down. And then eventually it finally in May of 2019 broke out in the 1548. Then it finally went out again to 2058 in May of 2020. But then if you look at it, it went up, it retested that top in March of 2022, but it didn't break out again until if you look at it, March of 2024. And March of 2024. So that was 4 years. So if you look at it from the beginning of the bull market, the first top was in 2000, September of 2016, but it didn't break it. And it's not like, if you look at this, during that 2 years between like May of 2022, March of 2022, and September of 2020, it's not like it stayed around 2000. It hovered around 1600. It went down and just hovered around. And then it went back. And then from January, no one talks about this, of 2022, it made to 2000, but then it went to around 1600 and up until I would say 2024, early this year, when it broke out, it was way below it, hovered somewhere between 400 points below, and it didn't come back. And then it finally broke out. I think it will consolidate if it does consolidate 2400. But no one talks about this, but they say this is a bull market, but for the most years, gold's been hovering low and way lower than its breakout in 16, 2020, and 2022. So it felt like a bear market because if you look at days it was actually like in a bull market price, probably not many. Probably most of the days were not. I bet you there were more negative days during this time frame from, I can't prove it, 2015 till now than there were. And that's just what's not. I think this will come back and go up to 33, 3,500. Who knows? It could go up to 4,000. This is actually a long upline. Who knows? But that's what's not talked about is during the 2000, let's 16 through here, a lot of it, most of those days were spent here. It wasn't like a sort of a sidestep or a stairs up. Literally, just you walked, and then you finally got on the elevator and went up. And then once again, you fell down a couple of floors, walked, got on the elevator, and then the elevator kept taking you up. And I think this is one of the reasons. If you look at the stocks, this is, I think this is the Huey. If you look at it, just go back to 5 years. This was around 2019. So finally, during that breakout, let's just go to all. If you look at it, this was the low 2015. If you look at the stocks, they had a big run up, but then they went down. 2017, they were negative. 2018, but they didn't really break out till the end of 2020. And it was around, let's see, July of 2020. Then it just kept going down. And there was like a breakout between 2022, but then right here, I think it seems like 9/20/22 was the bottom, but it didn't really break out till February. It didn't really start moving till February. So even though gold started moving in, let's see, even though the gold started moving in January, the miners sort of lagged. And they really didn't start having a move. In fact, during January, it was still going down, but the miners didn't start moving up until February. And they still haven't moved all that much compared to gold. I do think in this next up move, the miners are going to play catch up because I've been following the miners a lot. They're fine. A lot of them were negative profits, but everyone talks about the Dow to the stocks, but they don't talk about this. Is that for even though it's gone up like this, most of the days gold's price hovered near its bottom. And so the miners probably lost a lot of money. And when the price finally broke out, it didn't spend many days, maybe a couple of months at that price, and then it would just come down. And for a couple of years, from 2021 to 2024, it would spend most of it 1600. This is around its cost. It would spend most of its days around here. And they really didn't have. This is the first time. And this is why I think the stocks have performed is there was a lot of dilution in here and debt to survive. And then they finally got some profitability to pay it back, but then it would come down. Then it's 3 years of dilution, debt, and all sorts of gimmicks to survive. And I think this is the first time they're having profits. And I think a lot of companies are now able to merge and M&A. And I think the next upswing, the miners will perform a lot better because now they have some profits and they're still, despite this correction, the miners are still profitable. And they're able to return some of those to shareholders. So no one talks about this, and I just wanted to talk about it. And this is why just going from 2015 on, if you look at most of the price, it's most of the time spent. Well, the mining stocks were at the lower because that's where the gold stocks were. There was a brief upswing here, but the gold price would come back down. So the miners sold off, and if you held physical gold, you're still profiting, but the miners, they only had, of those 3 or 4 years, they only had around 6 months of selling at that high price. They didn't get that, they didn't get to take advantage of that price for a long period of time. But if you actually look at the gold price now, where it is, I think I didn't have Kitco, so I was just using that. But if you look at it where it is now, of course, yeah, I did gold and silver. Why don't they just have? No one really goes to this website other than to look at the gold price. Why don't they just have it up there? If you look at it now they're still profitable despite this correction or whatnot. The miners are still profitable, so they're able to create returns and share buybacks, dividends. They're able to pay down debt, increase profits at these prices. Same thing with silver. Silver, probably true with silver. And I think that's why this year you're seeing. So a lot of people want to say it's because people are going to stocks. And I think that's partially true, but I think if you look at it here, if you look at the year-to-date return, this is the Dow. This is 1862. It's 18% the Dow. The S&P 26.84%. Gold's at 27.6. This is GLD. Gold's at 27.6. So gold is outperforming the stock market. And if you look at the miners, look at silver. Let's see if it is outperforming. I don't know if it is, but yeah, and silver is outperforming by 29%. Let's do silver mining ETF. Well, if you look at the silver miners, they're only up 20%, out underperforming silver. And I think the main reason they're underperforming is that same reason with gold is for a long time, most of those prices. So they still have a lot of debt overhang. They still had a lot of dilution, but now they're actually making some net income, but it's not like an enormous net income. It's a small net income. And they're just getting to the point where they can do share buybacks, maybe a dividend, reinstitute some stuff. But they're not there yet. You have to remember these were years and years dating back to 2015 where they had to live off refinancing debt, debt rollovers, issuing shares, and then issuing. So the miners aren't just going to shoot up and outperform like they did in 2009, 2010, after that bear market, because the difference between this and '08, they had in '08, yes, there was a decline, but the miners were profitable for all those 6 years. So they could immediately go right back to uh, dividends, share buybacks, among other things, and M&A. And that's why, if you look at a lot of it, the stocks were just booming up. Now, I do think the miners are going to play catch up because during this correction, now they're profitable. During the last corrections, they weren't profitable. Like they weren't profitable. There was a lot of dilution cost from the 2020 till the 2024 uh correction or bear market, miners were not profitable. And from 2016 through 2019, miners were not profitable. So they had a lot of different dilution and debt games they had to play with. So, and if you look at it, let me see, which one is this? So yeah, that's all we did. 18.26, that's the Dow. S&P is 26.84. And just to refresh, 27.6 is gold. That's the GLD. So gold is outperforming both. And then silver year to date, and I do year to date, 29.4. So gold and silver alone are outperforming the stock market. So that is, and then if you look at GDX, year to date, this is 21.57. And I think the reason it's finally going up and getting some tension is now they're going from not being profitable to being profitable. But if you look at this, 2019, it goes up. And it really goes up because they stop diluting, they stop doing debt, they pay down some debt, they have good net income, their interest expense comes down. They have a net income now. But if you look at it 2020, it goes down immediately, and that's because price went down. And 2021 there was some hope, but it really came down. GDX back to 29. 2022, there's a spike, but it came back down. And if you look at this correction, it hasn't been that bad. It's not like, look at this one here in 2022. And that's because there's still profitability. And I think it's going to create, I'm not a technical guy, but these are bounce backs and a launching, another launching. So look at this. And then let's go to the juniors. This is, if you look at it, and look at this, the GDXJ. If you look at all, this is, if you look at the juniors, a lot of them have not been profitable, and because the seniors have not been able to come in and buy out, it's been hard to get debt. They've had to issue a lot of shares, sell off to royalty and streaming, but they have not been doing well at all. But if you look at year to date, a lot of these junior producers are now, they have favorable financing terms, they have profit. They're up 27.33. They're outperforming the general stock market. This is GDXJ. And I do think it will get back up here. I'm not a prophet, just my opinion, not financial advice, definitely. But right now, GDXJ has been getting smacked, and that's because these are smaller companies. They don't have but right here, and if you look at it, March, even while gold prices were rising the first 2 months, the juniors they weren't really in a favorable environment, and they didn't really start making a move till March. And then when gold finally broke 2000 and 2000 was gonna be the norm, and they realized they just kept moving up. Now they're in a correction. I mean, that happens. All the people from here, from March to August and September, they calling for a correction. They've been wrong. Here it's happened. I mean, they're due for a correction, but I didn't call one. Actually thought there was one, but I didn't call one because I knew the psyche of people just in case anyone was talking about selling or whatnot. I didn't I always say I'm not doing financial advice. This is just my opinion. So, and I'm not a prophet, so, but I was just upset that people called them because I'm like you listening. I'm investing in this and I'm trying to rationalize it, but no one ever talks about it. The reason why, if you did days negative, I bet you in baseball, I'm just gonna use baseball. We had an analogy and there was only like 6 teams, and one of my teams was the Nationals. And if you bet $100 on the Nationals every day, just gambling ops, you would have made money. Even though their record, they only won 71 games. And I bet you if there was something like this, despite the gold miners, I wish someone could, despite gold miners are gold. From 2015 to here, you had to bet $100 each day. Gold was going to go up or down. And you just had to bet it was going up. I bet you lost money. I bet overall, if you did that and just compounded it, I bet just straight up $100. If it finishes the end of the day in the red, you win. Finish the end of the day in green, you lose. I bet whoever did that, let's just say they did that from 2015. This is GDX, so it's not GLD. This is from 2015. Is this GLD? Yeah, GLD. Good. So I can do all. I bet you, even though GLD went like this, I bet you if you had to you bet $100 each day. $100, if it went down, you lose money. Up, you win money. You would be down in the hole despite this. Because if you look at it, just look at this. It's just all sideways. Peak and then down, down. Even though it went up, it's just slowly going down. Even though it went up here, it just goes up very quickly and slowly grinds down. And I mean, I bet you if you did this, take out 2024, maybe 2024, you would have made some money. But I'm willing to bet, I'm willing, not much money, but all the way from 1223 from the beginning, someone probably would have lost money. I'm not saying I'm willing to bet, I'm not, but I would think so. Because there was just for these corrections last for years and it went on below the mining cost. So anyway, that's what I said about gold. Very few people talk about it, but I think the reason the miners have grossly underperformed is gold, when it hit 2000, it went back down to like 1600, which was production cost for a lot of companies. And it would stay there for like 4 years. And then next 4 years, it came like 2022 would come back and then it would go back down. And I think the bottom was I know the bottom was like October, November of 2023, and then didn't really break 22,000 until January of 2024. And I think that's why the miners have underperformed. I don't think it's anything in particular to a relation with the stock market or anything else. I just think that high price was not there for very long. And the real price of gold for most of those years, even though it went up, was much lower. And I bet you anyone that's mining would probably agree with me. Anyone in the mining business, and I mean privately, they would never agree to like someone's like, I talk to mining companies every day. It's like, yeah, well, you're a newsletter writer and they need you to sell their company. They're not going to tell you that. So anyway, let's go back. Let's get in the economic data. LMI, I don't think that matters with the market, Red Book, but job openings, and this is why the market really didn't boom in this Trump euphoria, is that a lot of people are still wondering about but the job openings, it's good for the market. Job quits is actually good for the market. Now, I think that's BS, and you can tell a lot of these rich people in the media, corporate world, they've never really been in the real world. Job quits is a bad thing, in my opinion. Because I've seen so many people where they've told fire or resign. And a lot of people don't want to be fired on their record. They don't want it on their record, so they resign and they make up some BS excuse why they resigned. And unemployment benefits are absolutely nothing. So nowadays, you can do what some of my family members or whatnot. They did Uber or whatnot. Uber or gig work and find a new job and just say, you had to take care of someone or whatnot. Uh, but yeah, but the economic optimism, 54, goes below the consensus of 54.1, but that's still a very strong number. And I think that's one reason, like the Dow was down, well, S&P was up. They say it's a new record, but the S&P was only up like 2 points. It wasn't up much. And I think this is the reason is when it comes to this, just go into this article real quick. Job openings rise more than expected. Or how much further Federal Reserve will slash interest rates. So yeah, they view this. But look at this. September figure was revised lower than job openings initially reported. They're still doing this. It's unbelievable. Well, I mean, this month was the election, so I think there'll be strong data now because they have to revise it. I don't think they're going to be more, I think they'll be more honest. They're not going to be completely honest, but I think they're going to be more honest next year. Um, Look at this. Labor market is softening but not collapsing. So yeah, that's all I had to say is this is strong and I think there will be a lot of revisions for the next couple of months. But if you look at the actual economy, I'm looking at this. This is the one thing. Three more articles. Rising costs from inflation, interest rates contribute to a continued increase in large corporate bankruptcy filings. And my wonder is when is this going to show up in the market and sentiment? Through the first half of 2024, services, manufacturing, finance, insurance, and real estate contribute to the year-over-year increase. So a lot of people were getting a lot of bankruptcies. So increase chapter 7 and 11. Now, chapter 7 is not is like corporate restructuring, not a bankruptcy lawyer or whatnot. But chapter 7 is a liquidation in the company. So, and this is assets exceeding 100 million. So these aren't small businesses. Number of filings rose 8%. Let's see. There it is. Filings rose 8%. 43% higher than annual average between 2005 and 2023. So if you look at this, look at this. Number of bankruptcies fled companies over 1 billion in reported assets. Highest number since 2020. That's the crisis. So if you look at it, this is the worst since. So the most common Delaware and Southern districts. Now that could be misleading because a lot of people will open up a Delaware LLC just so it's because it's easier there. And then they'll use that for like renting their house or for some business that lose money. But I mean, these are big businesses. So uh actually no, this is a big deal. Delaware, a lot of people open their business because it's easier to open up LLCs in Delaware. So services and manufacturing, that's like, yeah. So finance, insurance, and real estate industry also experienced an increase in bankruptcy. So it's service companies, which makes sense and whatnot. So you can tell like if you believe the market, stock market, I think after doing this video, I think the main reason the stocks have really underperformed gold is yes, gold like went to 2000, but it didn't stay there. It would go to 2000 and then go back down and hover around what was basically production costs. So their operating margins were barely profitable. And then if you include G&A, overhead, all that, they were losing money. So the profitability during every 4 years was only for 7 months. And I think the next upswing is going to be much bigger because now gold mining companies are actually profitable. And to show my thought, to show my proof, going back to it, let's just go to royalty and streaming. We'll go to Royal Gold because everyone says Franco or wheat and precious metals, but now since they have lower cost. Look at Royal Gold, even though it's a seesaw. If you go back to 2015, it was at 42 bucks. Now it's at 148. It's sort of followed gold because of the prices. And then the other one, I don't know. I don't know what else to do. But you get the idea. Royal Gold, which isn't, it followed. So anyway, you saw the bankruptcy stuff. And then the other one I found out, look at this vodka maker. Stoyle Group files for Chapter 11. Now, this is just Chapter 11 is a reorganization, but it says balance sheet and liquidity. Of course. I hate those. But yeah, you saw it, Stoyle Maker, and they did poorly. And it's good vodka. People are drinking more. And so that's all I have to say in terms of financial. Last thing I want to do is Fun fact, I like bourbon a lot. So, gosh, I wish I can I don't know. Hate this stupid ad. They can't even make this fun. But anyway, ask five bartenders. Best bourbon. Love old fashions. I make my own recipe. I will tell you my recipe. I'm gonna say it here. I'll say it twice. So, but they say the best bourbon for an old fashioned is these are all different. Bulliet, Bulleit. So it's Bulliet, and look at this. I asked five bartenders to name the best bourbon. They all said Bulliet. So interesting thing. I'll give you my recipe, which is awesome. And it is, we'll just do, it's 3 tablespoons of bourbon, 1 tablespoon of simple syrup, a little bit of bitters, just do it. I'm gonna take off the share. I'm gonna take off sharing now. So, 3 tablespoons of bourbon, one of simple syrup, and then take a little bit of bitters. Just doot doot. And I take a little bit of the cherry. It can be machismo. It doesn't have to be a bar. Put it in. I like the machismo. Pour a teeny bit. It can be like a drop or 2 or 3 drops of cherry juice, and then I put it in the shaker and shake it and then put it in. Pour it in is the best old fashioned you've ever had. Everyone loves it. I'm the youngest child, and so my family likes to go after me and pick on me. They don't even make fun of that drink. So I share with you best drink. So anyway, just want to reiterate, nothing I say can be construed as financial investment advice, just my opinion. Investment advice, obviously, none of it is, just my opinion. And hit that like button, subscribe, and thank you very much for watching all the way through. It really helps the algorithm. There's more I want to do. You can follow me on X and Rumble or YouTube, depending on where you're watching this below. And I'll see you next video.